Hi there, this is Bill with Smart Trades. It's Tuesday, November 3rd, around 11:45 Pacific time, and I've got some updates, a little bit of change in the counts that we have on the markets and their projections for the next few days or weeks. First, we'll start off with the S&P. S&P futures have carved out a very clear 5 waves down, and we're getting bullish divergences both off of breadth and off of volume. That said, so far the rally has been exceedingly weak. So I would be looking for the possibility that this rally is going to fail sooner rather than later. It should bounce to some extent from here, and I would expect at least a bounce back, say to 1050 to 1060, perhaps to retrace into the uptrend channel, the bottom of the uptrend channel, which it broke. However, I would be alert to the possibility of a failure, since the rally so far is so weak and so lackluster in terms of both volume and breadth and price. I mean, it's just not going anywhere, and in fact, so far the rally looks to be corrective on a very small scale, so even new lows wouldn't shock me. Although again, the idea here is, with this completed pattern down, is that we're going to get a rally back. It should go back to the previous fourth wave. Again, that's around 1050, and that's where the trend channel is. But you know, the better target might be the previous fourth wave of one lesser degree, and that's in the 1060, 1065 area. Now, the Dow is somewhat a different story here. No matter how you count this decline, there's overlap between the wave 1 down and the wave 4 rally back. If you count 1, 2 to here, 4 overlaps on 1. If you push over wave 1 to the low on the 23rd, there's still overlap with wave 4. Now, overlapping wave 1 with wave 4 is an Elliott wave. No, it's just something that should not happen according to the theory. So if it does, you should look at a different count. In this case, the possibility that the entire decline in the Dow is actually corrective. We shall see. I mean, the implication of that is, if the Dow decline is corrective, that it's going to make new highs. Now, the scenario that might play out would be that the Dow makes a new high and the S&P puts in a corrective rally that fails below that 1101 high. And at this point, I'm going to keep my mind open to that possibility. Otherwise, we've got to resolve the pattern here into something other than this 5 waves down, because it's not 5 waves down because of the overlap. Hopefully that makes sense. It's a bit of an esoteric Elliott wave, but nonetheless an important point to make as far as counting waves. 1 and 4 should never overlap in an impulse wave. Anyway, here's a very clear-cut chart of gold. The gold's pattern down, as I mentioned, looked like it was corrective off of the highs back in October. I counted a nice clean 5 waves down in C, and from there, off of that low, we have an impulse back up. It's exceeded my 1079, 1080 target. In fact, we've gone as high as 1087 as of this report. The other possibility is that it could even extend further. We could recount this as 1, 2, 1, 2, in which case this is a 3 of a 3. If that's the case, we're going quite a bit higher, probably over 1100 at least. The other possibility that's also somewhat bullish shorter term, but perhaps not quite as bullish, is that we have an extended 5th wave, and that certainly seems to be at least the case. Now, looking at the weekly chart, here's the triangle that we broke out of, and you can see, even on the weekly, we do have 5 waves up off of the apex of the triangle. So we are getting close to a peak in terms of the termination of a pattern. That said, the top of the channel, this is just a regular regression channel, comes up well over 1100 if indeed we break down into an extended 5th, or have to recount this as a series of 1, 2s up. I tend to favor that we are peaking probably sooner rather than later, but um, I wouldn't be shorting it yet, that's for sure. And if I were long, I'd actually be holding with the tight stop here and let this thing run in case it goes parabolic straight up to the top of that channel. And finally, here is the dollar. Now, the dollar did not unfold as expected to the extent that I was thinking that we'd have an ABC down into the 75-60 area. Instead, the corrective pattern took on a triangulation, a contracting triangle. Contracting triangles are either wave 4 or B wave patterns. In this case, it seems like it's got to be a B. The implication of that is that this entire rally off of the October low is an A, triangle B, and then an impulse C up to around the 77.50 area. And the implications of that are that we're going to make new lows. Now, it's possible it could unfold in a variety of other ways. We'll have to keep an eye on it. But if it takes out 76, I would say the dollar is going back down below the 75 area. It's going to go back and test the bottom of the wedge. And we'll have to reboot that count in terms of looking for a bottom in the dollar. Well, just a quick report for now. That's all, and hopefully you're having a great day trading and otherwise. So long for now.